everyone, welcome to Fox and Media Digital. My name's Amy, and today I'm joined by Steven Pyne, who's Managing Director at Holden Partners. So welcome, Steve. It's great to have you on the channel.
Hi, Amy. All right. Good to be here.
Thanks for joining. Of course, you're new to the channel, so it's nice to have a little spotlight on you and welcome you to our wealth management network. So just to get started, would you be able to tell us a little bit about yourself, about your career and what you're doing at Holden Partners?
Yeah, sure. Well, we established Holden Partners. Well, we're in our 20th year now, so it's 20 years ago. There were five of us who set the firm up originally, and we basically wanted to create a firm which focused on long-term relationships with clients and also had a specialism in ethical and environmental investment. So we went from pretty much a standing start. And since then, the business has grown, and now we look after about 900 clients, about £450 million worth of assets under management. We have about 32 people altogether. We are a B Corp, and the focus continues to be very much on long-term client relationships. So yeah, it's been an eventful 20 years, but one which has been, very, very enjoyable.
Great. And before we dive into ethical investment specifically and what you're doing on that front, could you just give us a bit of an overview into the current challenges you're having with tax, estate and retirement planning, and, for some of those professionals out there who don't necessarily specialize in that, what those challenges entail?
Yeah, I think, there's always challenges around legislation and how that changes. So, with this year, I think there's been more focus on annuities, for example, and whether clients should take out annuities because of rising interest rates. So perhaps that hasn't been a topic over the last few years, but it's certainly come back onto the agenda now. Yeah, I think in terms of regulation, consumer duty is a big area that's is a challenge over the next year and the coming years. It's going to be a big focus for firms and something that they need to get right, because obviously a regulatory requirement. So monitoring objectives and outcomes for clients and consumers more closely is going to be a very time-consuming area for firms. And we're also seeing that some of the retirement and insurance companies we're dealing with at the moment seem to be having more challenges with service levels. I think I'm not sure whether that's something to do with sort of the pandemic and what's happened with sort of working environments since then, with more people working from home. But it does seem that from our experience, service levels perhaps aren't what they used to be with some of the insurance companies and retirement providers. So lots of challenges out there, as there always are, but lots of opportunities as well, I think, for good firms.
That's great. Thank you for sharing that. And on that note then, so in line of these challenges as well as interest rates, what kind of client demands are you seeing when it comes to ethical investment strategies, and has that been a priority?
Yeah, well, ethical and environmental investing has always been a focus of ours. So it's just a doing for the last 20 years. We've always put a lot of resource into this area. I think the big thing over the coming year is obviously going to be the SDR requirements and fund labeling. So obviously there's been a consultation in that area, and we'll wait to see what the outcome is there. But I think it's going to be huge for the industry, because basically funds are going to have to be labelled, and there's going to have to be a huge amount of disclosure that wasn't there previously on what funds are doing and their approach to environment, ethical and sustainability criteria. So we're putting quite a lot of work into that at the moment. And I mean, we have our own in-house research and investment team, and a significant amount of what they do is researching ethical and environmental funds. So that's always been a big focus for us. So nothing has changed there. We have seen a growing demand for ethical and environmental investing over the last couple of years, particularly since the pandemic. I think the last 12 months has been quite challenging for the area, though, obviously, because investment markets have fallen, and clearly ethical and environmental funds are not going to have the type of exposure to, or they're not going to have any exposure to areas like oil and mining, for example, and perhaps tobacco, and things like armaments, which other funds and investments are going to have. So it's been a challenging year for ethical and environmental investing. But if you look back over the last 5 or 6 years, actually, a lot of ethical portfolios have done pretty well. So you have to look at these things in the round. So I mean, what we're seeing is more interest in the area from particularly younger clients who I think do have a greater awareness and perhaps interest in the issues. I think there's just more awareness around the whole area of climate change now than there was, say 5 years ago. It really is sort of part of the mainstream conversation because the issues are becoming more urgent and more pressing. So obviously, you've got people like Greta Thunberg out there, and I think that the David Attenborough series was obviously hugely important in terms of the impact it had on people and their thinking about the environment, and the news stories that don't go away. So I think it's becoming sort of more and more important, the whole area. So yeah, we're seeing growing interest in it, and I think that's borne out by the figures and the volumes that are going into ethical and environmental and sustainable investments.
Yeah, it makes sense that the younger client segments would have a keen interest in that, with the awareness that's out there, in general consumer trends and public media. So when it comes to that, then what can firms be doing to meet the demands of next generation clients and kind of prepare for that growing interest and demand for these kind of ethical investments in their portfolios?
I think you've got to. It depends how those clients are coming to you. If they're coming to you via their parents, I think you've got to speak to the parents about the issues as well, which you should be as part of the regulatory requirements now. But I think it's up to firms to try to educate all of their clients as to what the main issues are in the area, and to create really a proper debate around the issues, and really sort of ask the questions in the right way. I don't think you can kind of skirt over these sort of things. I think it's really is down to sort of personal opinions, and personal preferences. So I think firms have got to provide clients with as much information as possible on this area. There's a lot of stuff out there, but I think it's up to firms to sort of filter it and guide people in the right way. I don't think you can be evangelical about it. I think it's our job to provide people with the right information so they can make their own informed choices. So I think that the advisory firm is always there to guide and inform, but clearly not to make the final decision. But I think young people actually, as I've said before, seem to be much more aware of the issues, and you quite often, although the younger client is introduced by their parents, you will end up having a different conversation around the whole area of sustainable investment than that which you have from their parents. But it's a very sort of dynamic area. What we're seeing is some clients who weren't interested in ethical and environmental investment, say 7 or 8 years ago, are actually now beginning to think about it more carefully. And as their children are growing up, they're beginning to question their own investment approach. Like, are we comfortable holding these investments? Do we really want to be telling our children, if they ask, what our portfolio is invested in, if we're not particularly comfortable with it? So there is a growing awareness, I think, of the issues and the options that are out there for ethical and environmental investors. And I think if you're a younger client looking for investments, then I think it's a good time to be investing, because the range and the breadth of investment alternatives is greater than ever. 20 years ago when we started, there was very little in the way of alternatives, but now the universe of invaluable investments is huge.
That's a good point. It looks very promising. Having that opportunity to actually invest in the first place will encourage more sustainable investing, as you say. So I think it's only onwards and upwards from here, especially when it comes to the younger generation. So
I
with
think
that
that's right.
said, yeah. So with that said, obviously with all these regulations coming out, changing attitudes to environmental and ethical investments, as well as the upcoming end of the financial year, what are you hoping to see from 2023 and beyond? What's your focus for the next 12 months that you'd like to see in the industry?
Yeah, what I'm hoping to see from the industry, I think the industry has a lot to offer. It's an important industry. It's an important employer. It does incredibly important work. But what I think we do need, we need to encourage more women into the industry. Then we need to have better diversity, and I'd like to see more young people coming through. I think that they're big challenges for the industry as a whole. How we get greater diversity into firms across the board. Really, it's a challenge. The industry, I think, is still, I don't think it's moved as quickly in that direction as we would like. So, I'd like to see more done in terms of partnerships with universities. I'd like to see more done in terms of apprenticeships, perhaps, and more done from not necessarily the regulator, but perhaps the professional bodies, to encourage a different type of person into the industry, because I think we're still attracting too many people from the similar backgrounds. So I think for the longevity of the industry, and to ensure we're getting the right range of people in, more needs to be done to get a better range of people in. So I think by doing that, you'll attract better clients, you'll have better debates, you'll have better ideas. So I think that's the big thing I'd like to see from this year, 2023, more to attract more women, and a better diversity of people within the financial services sector. The other thing, I think progress is being made on greenwashing. I still think that's a big area of concern for a lot of people, and it might put people off investing sustainably. So I think more needs to be done there. And there's always concerns about in the industry about whether there's too much regulation. I think a lot of the regulation over the last sort of 20 years actually has been helpful to create a better, more professional industry. But one of my concerns is that the costs on firms now are becoming quite high. Whether something can be done to reduce, the regulatory costs on firms, perhaps, would be something else. So they're the main things that I'd like to see in 2023.
Yeah, that seems to be top of mind from a lot of the industry leaders that we've spoken to on this channel. We had Tracy Davidson the other day, whose video will be actually going up this week, and she mentioned that she's keeping a keen eye out on the regulation, which is not often something that we talk about at the Wealth Summits. But that's actually something that's been mentioned as well by Jarkko Surila, who's at Nordea Asset and Wealth Management. He's also just been featured on the channel talking about regulation as well as greenwashing, so you can watch out for that coming up this week as well.
That. Yeah.
But yeah, the diversity piece as well, like you say, is very important. We try to have a very diverse speaker lineup at the Summit for Wealth Management, and we do have a lot of female speakers on board, with Tracy being the keynote. But you can't deny that the industry definitely has issues to address, and I think that's something that we would like to discuss further at the conference as well.
Yeah, I think there's work to be done there. Definitely, just work to be done there. It's not just going to universities. It's getting people from a whole variety of backgrounds that I think is lacking at the moment. So creating pathways for people from all walks of life to be able to enter the industry, I think would be a big step forward if that can be done.
Yeah, and of course, you will be continuing this conversation at the Summit for Wealth Management on the 9th of May on your ESG panel. And we will also be having more discussions like this at ESG London in November. So we'll keep you posted on that and let viewers know about the details for that coming soon. But for now, thanks so much for joining, Steve. It's been a pleasure having you.
Cheers, Amy. Thank you.
Thanks for watching. Don't forget to follow our YouTube channel for more content on challenges and opportunities in asset management, wealth management, and ESG. And don't forget to give this interview a thumbs up and hit the subscribe button.